management is guided by Sharia principles, which means it avoids elements like interest or riba, uncertainty known as qarar, and gambling or known as maisir. Instead, it promotes ethical, fair, and transparent practices when it's come to lending and borrowing. In Islamic finance, we use Sharia compliance contracts such as murabahah, ijarah, mudarabah, and musyarakah. To ensure that these practices are followed properly, strong regulatory and legal framework are very important. This framework helps make sure that everything is Sharia compliant and that the public can trust the system. Malaysia is actually one of the global leaders in Islamic finance. Our central bank, Bank Negara Malaysia, plays a big role in this. One of the key laws is the Islamic Financial Services Act 2013 or IFSA, which strengthens Sharia governance and holds financial institutions.
In the context of Islamic credit management, legal frameworks are essential to ensure our financial practice compliant with Sharia principles. This framework regulates how credit is offered, recovered, and enforced in line with both national law and Islamic teaching. The first point is Sharia law as the foundation. Sharia law prohibited riba, ghara, and haram elements. Therefore, Islamic credit use contracts like murabahah, tijarah, and tawarruk, which Sharia Supervisory Board (SSBS) oversight in compliance. The second point is national legal and regulatory frameworks. In Malaysia, Islamic and civil law work together. Key legal sources include firstly is Central Bank of Malaysia Act 2009, CBMA, empower BNM and its Sharia Advisory Council (SAC), Islamic Financial Service Act 2013, IFSA, govern Islamic financial operation including credit and consumer protection. And the last is Contract Act 1950 and Hire Purchase Act 1967. Apply if alike with Sharia. The third point is regulatory bodies and institutions. Bank Negara Malaysia regulate Islamic credit practice. Meanwhile, Security Commission overseeing Sharia compliant investment, SAC, the top Sharia authority in Malaysia. The next is Islamic Financial Institution, IFI, must have internal Sharia committee. Next, court system and dispute resolution. Malaysia has a muamalat bench for Islamic finance case. Court refer to SAC for Sharia issue. Suit, mediation, and tahkim, arbitration are promoted for peaceful resolution. The last point is relevant to Islamic credit management. A strong legal framework ensure contracts are Sharia compliant, protect consumers, reduce risk, and boost trust in the Islamic financial system. Bank Negara Malaysia (BNM) plays a central role in regulating Islamic credit management through key law like the Central Bank of Malaysia Act 2019, 29 and Islamic Financial Service Act 2013. BNM ensure that Islamic financial operations are stable, Sharia compliant, and consumer friendly. The first point is objective of BNM regulations. Firstly, ensuring financial stability. BNM monitor Islamic bank to reduce credit risk and set rules on capital adequacy and lending limit. It promotes responsibility, Sharia compliant, financially free from riba, ghara, and maisir. Next, upholding Sharia compliant. BNM oversee Sharia governance in Islamic banks, issue guidelines on contract like murabahah and ijarah, and refers dispute to the Sharia Advisory Council, SAC. Next, protecting consumers. BNM ensure fairness in Islamic credit contract by requiring clear terms, preventing unfair practice, and facilitating accessible dispute resolution. The last one is supporting growth of Islamic finance. BNN encourages innovation and competitiveness in Islamic credit products like personal and housing finance, both locally and globally. The second point is BNN power and authority. Supervisory powers. Under IFSA 2013, BNN can license, audit and take action against Islamic financial institutions to ensure full Sharia and regulatory compliance. Next, Sharia Advisory Council (SAC). BNM established the SAC under CBMA 2009. SAC provides binding rulings on Sharia matters, advise the courts and ensure consistent Sharia interpretation across all institutions. Next, policy making authority. BNM issues enforcement policy like Sharia governance framework, credit risk guideline and rule for contract like baik vitamin anjing and musyarakah mutanakisah. Last, enforcement power. BNM can take enforcement actions such as enforcing penalty, remove directors or Sharia members, and 14 unethical or non-compliant practice.
Sharia Governance Framework, a system that ensures all Islamic financial activities comply with Sharia law, avoiding riba, gharar, and unethical elements. Unlike conventional banks, Islamic financial institutions (IFIs) have a religious and legal duty to maintain Sharia compliance. Malaysia leads globally in this area, starting with the Islamic Banking Act 1983 and Takaful Act 1984. Sharia Advisory Councils became mandatory. In 2005, Bank Negara Malaysia formalized Sharia Committee roles, ensuring they advise, review, and approve products in line with Sharia. Then came the 2010 Sharia Governance Framework, introducing Sharia risk management, review, and audit, bringing full accountability. With IFSA 2013, compliance became a legal obligation. Breaches could result in fines up to Rm25 million or even board member disqualification. Today, Malaysia's model is a global benchmark. Countries like Bahrain and Pakistan are studying it to strengthen their own Islamic finance system. In short, Malaysia's Sharia governance blends with faith and legal strength, ensuring trust and integrity in Islamic finance.
Alright, next we move to regulatory requirements in Islamic credit management. Firstly, IFSA 2030 ensures that all Islamic financial institutions or IFI operate according to Sharia principles. One important requirement is the Sharia Governance Framework (SGF). This framework requires each IFI to have a Sharia committee that checks and advises on all Sharia matters. It also defines the roles of the board, senior management, and others to ensure full Sharia compliance. Next, IFI must follow the Sharia standards set by the Sharia Advisory Council (SAC) of Bank Negara Malaysia (BNM). These standards apply to contracts like murabahah, musyarakah, wakalah, and tawarruk. IFI must apply these rulings when creating policies, documents, and even during product development and marketing. To maintain compliance, IFI must also have strong internal controls. This includes Sharia risk management, reviews, and audit functions. If any non-compliance happens, the IFI must report it immediately to BNM and their Sharia committee. They must stop the activity and submit a reflection plan within 30 days.
Now, let's look at enforcement and compliance in Islamic credit management. Islamic credit must avoid prohibited elements such as riba, interest, gharar as SAIDI, and masyir, gambling. Compliance is ensured through a combination of Sharia law and national legal frameworks. Every Islamic financial institution must establish a Sharia Supervisory Board (SSB) made up of qualified scholars to monitor all financial products and ensure they follow Islamic principles. Internal Sharia audit and regular reports to regulators promote accountability. Legally, countries like Malaysia implement frameworks such as the Islamic Financial Service Act (IFSA) 2013, which Bank Negara Malaysia (BNM) enforcing compliance. Regulators conduct audits, issues guidelines, and may apply penalties or require product correction in cases of non-compliance. Disputes can be resolved in civil courts. Sharia courts are through Islamic arbitration to ensure fair and religiously appropriate resolution.
Lastly, IFSA 2030 also enforces strict penalties for any violation. These include fines up 25 million ringgit Malaysia, removal of officers, public warnings, or even forced transfer of business for non-viable institutions. This helps protect the Islamic finance industry's integrity and trust. In conclusion, IFSA 2030 strengthens Islamic credit management by ensuring full Sharia compliance, proper governance, and strict enforcement. This supports a sustainability and trustworthy Islamic financial system in Malaysia.
The main challenges faced by Islamic banks today is: first, Islamic banks must follow both Sharia principles and regulatory laws. Balancing these two is not always easy. Second, it's hard to design credit product like mudarabah and musyarakah. This involves risk sharing and that creates legal and operational challenges. As a result, many banks prefer using murabahah or tawarruk because they are easier to manage. However, some critics say these products feel too similar to conventional loan. Next, for the recent changes is, in Malaysia, the Islamic Financial Services Act (IFSA) 2013 made Sharia rules stronger and clear. It's also give more power to the Sharia Advisory Council and encouraged banks to develop new, fully Sharia compliance products. However, innovation is still slow because the rule and legal processes are quite complex. Last one, for the ongoing improvements, Bank Negara Malaysia has updated important guidelines like the Sharia Governance Framework and Reference Rate Guidelines. Islamic banks are also preparing to face new challenges such as digital banking, fintech, and cybersecurity risks. This is now more focused on better policies, staff training, and cooperation between regulatory and banks. The goal is to make Islamic credit not only ethical and Sharia compliance, but also modern and competitive.
To summarize, Islamic credit management stands on strong Sharia principles that promote ethical and transparent financial dealings. It avoids interest, excessive uncertainty, and gambling, focusing instead on fairness and social justice. Rather than using the conventional loans, Islamic finance applies halal contracts like murabahah, ijarah, and musyarakah, which support profit sharing and ethical risk-taking. In Malaysia, the introduction of the IFSA Islamic Financial Service Act 2013 was a turning point. It made Sharia compliance a legal requirement, supported by a robust framework including Sharia supervisory boards, internal audits, and oversight by Bank Negara Malaysia (BNM). Technology also plays a big role. RegTech, blockchain, and smart contract allow real-time monitoring, accurate reporting, and better integration with digital banking, all while staying true to Sharia. To remain competitive and trusted, the Islamic financial system must continue to innovate, strengthen its governance, and strictly uphold the values that make unique.